Welcome to our webinar stream presentation with advice for first-time home buyers and investors. Hi everyone, my name is Leah and I represent the Chas Everett International Property Group in conjunction with Dev Properties. We have offices throughout South Africa, and as a property group, we have been serving South African property clients for over 40 years. And today's webinar is to assist home buyers that are looking to purchase a home but are not sure how to get started. Welcome to one of the most exciting moments in your life. Buying your first home isn't just putting the roof over your head. It's where you eat, sleep, raise your family, and build your life. This masterclass will walk you through the most important steps with additional advice you need in order to get the most out of buying your first home. You will learn how to buy your first home, everything you need to know about financing, avoid costly mistakes that can save you thousands, a step-by-step process to buying your next home, plus so much more. Firstly, a little bit about the Chas Everett Property Group in conjunction with Dev Properties. We service the East Rand and have branches nationally. We were established 41 years ago. We are independently owned and love our local communities. And we are here to serve your needs. So let's take a look at the buyer's roadmap. Number 1, you need to choose your real estate professional. Get pre-approved financing. Search for homes, let's go shopping. Make an offer, negotiation and contract. The registration process, final details. And then lastly, congrats, you have a new home. But first, are you ready to buy? Do you have a steady income with low to medium debt, 3 months of payslips and bank statements, and a good credit record? Step 1. Choose your agent. Start by hiring a pro realtor who works exclusively for you. When it comes to buying your East Rand home, we have got you covered. We know the market and about neighborhoods you didn't even know existed. We obsess over prices, property value, and the latest hottest listings. We have access to historical data and keep up to date with builders and new developments. We problem solve, negotiate, and make sure our clients don't buy the wrong home. Our goal is to always make your experience quick and seamless as possible. This means being real and transparent through the process and being responsive and available to you. Buying a home is one of the biggest transactions you'll make in your life. Make sure you get the time and attention from a competent agent. Step 2. Get pre-approved financing Part 1. Understand your options. When determining which mortgage bond best suits your situation, there are some basic decisions you'll need to make. Types of mortgage bonds. Conventional bonds. This is the most common type of mortgage. Your lender will loan you up to 80% of the purchase price of the property, or its appraised value, whichever lower, and you have yourself the other 20% as a down payment. 100% mortgage. If you don't have a deposit to get a conventional mortgage, a full mortgage can advance you up to 100% of the home's purchase price or appraised value. However, you will likely be required to purchase life insurance, not to be confused with home insurance. Term and amortization. A mortgage bond term is the amount of time a lender will loan you money for, typically from 20 to 30 years. Because few of us can pay off an entire mortgage in a short period, lenders calculate or amortize the mortgage payments over a much longer time, often as long as 20 to 30 years. Interest rate. Your mortgage bond is made up of 2 components, principal and interest. Essentially, interest is the cost of borrowing money. Fixed rate. You agree on an interest rate with your lender, and this rate gets locked in for the term of the mortgage. A fixed-rate mortgage is great in an economy where the prime rate is increasing, but undesirable if the going rate is decreasing. Variable rate. Your interest rate fluctuates with the bank's prime interest rate. Your monthly mortgage payment amount stays the same. However, if the prime rate falls, more of your payment goes towards the principal and less goes towards the interest. If the interest rate rises, less of your payment goes towards the principal and more goes towards the interest. Get pre-approved financing Part 2. Our best advice, Always shop for your home loan using a mortgage originator. Here's why. Mortgage originator versus banks. Big banks have only a limited access to their own mortgage rates and terms. On the other hand, mortgage originators have access to multiple lenders and mortgage products. They shop around for the best mortgage terms. They negotiate for you, and they get you the lowest rate. Their commissions are paid by the lender, so their services to you are free. Get pre-approved financing Part 3. Get pre-approved for a mortgage. Your originator will help you get pre-approved for a mortgage so you know how much you can afford on a home. A mortgage bond pre-approval will be in writing, generally valid for 60 days, and will require you to prove your income and credit history. If you don't have something in writing and you haven't provided financial documentation, then you likely don't have a mortgage pre-approval. Ensure that you have a pre-approval before embarking on your home hunting journey. Knowing how much your lender is willing to loan will eliminate the risk and uncertainty of being able to obtain financing once you find your perfect home. Your home search. Understanding what you're looking for is top priority. Let's talk about the features of your future home. You've picked a Pro Chaz Everett agent to work with and have been pre-qualified for a bond. Now it's time to start looking for your new home. Let the fun begin. What are your needs versus your wants? How many bedrooms must you have? What kind of finishes are you looking for? Do you need a big yard for your dog? A great school for your kids? Of course, in a hot market like the East Rand, compromise is part of the process. Would you rather live in a bigger property or closer to town? Are you okay with something new or a fixer-upper and do the work yourself? Talk to your agent about what's most important to you, such as the location, price, square footage, bedrooms and bathrooms, style, features, and schools. Another important decision that has to be made by investors and first-time home buyers alike is what is the payment record in the area that I want to buy in, and what is the expected return, and what is the anticipated capital appreciation. You should also consider what is the property market like in the area if you should ever need to rent the home out in the future. In addition, always buy in the right location when new investment is happening. For example, like the Ekurhuleni Aerotropolis area on the East Rand. This means company growth, coupled with new jobs and rising demand for housing and rentals in the area, which will mean your property will have major capital appreciation. Making an offer. You found the one, now lock it down. Submit your offer. We draft the agreement of purchase. This is the legal document which has the price, to inclusions you want, light fixtures, etc., to your registration date, the date you take possession, to conditions that need to be met for the deal to go through. One of the most common included conditions is the financing condition. It's used to protect you, the buyer, by including that your offer to buy the property is conditional on you obtaining financing. Once you've submitted your offer, the seller can either accept it, reject it, or counter it. During these back and forth negotiations, you may need to compromise on small things, but our savvy agents will work hard to get you what you want. If your offer was conditional on getting financing, but your bank doesn't approve you for a mortgage, then you get your deposit back and you do not proceed with the sale. Any deposit paid will be refunded if applicable. Closing cost breakdown. Pro tip 1. Buying your home in a new development saves you paying transfer fees and bond and transfer registration costs, saving you thousands. These are the items that will be in your closing costs. Property valuation fee, lender debits to loan account, transfer duty to SARS, not payable on new developments, attorney bond fees, also not payable on new developments, attorney registration fees, not payable on new developments, rates account, deposit. On sectional title, first payments to the body corporate. Pro tip 2. Check if you qualify for a FLISP subsidy. certain home purchases qualify for the FLISP subsidy. FLISP allows qualifying beneficiaries to reduce the initial mortgage loan amount or augment the shortfall between the qualifying loan and the total house price, bringing the eventual home loan installment to an affordable amount over the loan repayment period. The FLISP program is a subsidy to assist qualifying first-time home buyers with purchasing a home. The subsidy is paid directly to the conveyancing attorney or financial institution and can be used as a deposit to buy a home or to pay such into an existing home loan and reduce the monthly installments. Households with an income between 3,501 Rand to 22,000 Rand may qualify for the FLISP subsidy if they meet all the criteria, such as being a first-time buyer with a financial dependent and a South African citizenship. The current subsidies range from 130,000 Rand to 30,001 Rand. Pro tip 3. Investors can qualify for massive tax benefits. You can also benefit from a phenomenal tax incentive available for buy-to-let property investors, being Section 13 SEX of the Income Tax Act. What Section 13 SEX allows is for buy-to-let investors who purchase a residential unit can claim an allowance, but it is limited to a total of 55% of the price they paid for the unit. What this means is that if you purchase a unit from the developer, you will be entitled to claim this allowance. So how can you qualify for this allowance? There are 4 requirements to qualify. Number 1, the unit must be new or unused, including a self-contained apartment used for residential purposes. Number 2, the unit must be used solely for the trade of the taxpayer. In other words, not for the taxpayer's personal use. In other words, you may not live in the property. Number 3, the taxpayer must own at least 5 residential units in South Africa, all of which must be used for the taxpayer's trade. However, you don't have to buy them all at once. You can buy one in year 1 and one in year 2 until you reach your 5th property, when your tax incentive will be activated on the 5th property you buy. Number 4, the unit being claimed for must be situated in South Africa. For example, if you buy 5 1 million Rand properties, SARS will allow a 55% write-off against the cost price of the properties against your taxable income. This is massive. You could write off over 1.14 million Rand depending on your tax rate. When your offer is accepted. As soon as your offer is accepted, your deposit is submitted, if applicable, and there are no more conditions to be fulfilled. You have a firm agreement and the registration process begins. Registration is the point at which the ownership and the possession of the property are transferred from the seller to you. At this point, you will be in close contact with your lender and lawyer. You'll need to sign a ton of paperwork and, of course, provide payment for your new home, but this will come from your bond approved. Once all legal and financial obligations have been met, then pick up your keys and a bottle of wine, because congratulations, you've just got yourself a new home. Handover day. Moving into your new home. This is the big day. The agent will accompany you to hand over your new home and answer any questions. Everyone who is purchasing the property must be present. Contact information. I know how important your time is, and I sincerely appreciate you taking time out of your day to spend it with me on this amazing webinar stream presentation. This is the best time to purchase your own home, and this is the best buyer's market with the prime interest rate that is still very low and close to the lowest rate in the last 50 years. And low interest rates create an excellent opportunity for first-time buyers and investors to take advantage of low borrowing costs and low bond repayments. And you can take advantage of the transfer duty exemption of R1 million, which saves you over 50,000 Rand on average in transfer costs. It is now cheaper to buy your own home than to rent, so now is the time to buy. Feel free to contact one of our professional advisors, and they will assist you with all your property questions, as we give the best free property advice. And even if you are not ready to buy right now, please contact us. We will be happy to give advice and provide information to assist you for your possible future property purchase. And please remember that we have 7 new developments and we can help you find your perfect home. All of these are brand new developments and come with no transfer costs and no deposits required. I hope that you enjoyed this webinar, as I have been thrilled to show you how easy it is to become a homeowner if you have the right people to assist you every step of the way. So if you're ready to buy your new home, please contact us on 011 425 0502 and we will be thrilled to assist you. Till next time.